Welcome to the channel. Today's video is a deep and clear analysis of BRICS versus the US dollar. In this video, we will discuss what BRICS is, why de-dollarization is trending, whether BRICS can realistically challenge the dollar, what the latest data and analyst views say, and what this means for the future of the US economy. This is a research-based video meant for understanding, not fear. Let's begin. Point number 1. What BRICS really is and why it matters now. BRICS stands for Brazil, Russia, India, China, and South Africa. And recently the group has expanded to include countries like Saudi Arabia, UAE, Iran, Egypt, and Ethiopia. The reason BRICS matters today is not symbolism, but economic scale. Together, BRICS countries now represent over 45% of the world's population and roughly 1/3 of global GDP when adjusted for purchasing power. For years, BRICS functioned more like a discussion club. But after 2022, something changed. Western sanctions on Russia exposed a key weakness for many countries: dependence on the US dollar for global trade. This triggered a serious push inside BRICS to reduce dollar usage in trade settlements, especially for energy, commodities, and bilateral trade agreements. Analysts note that BRICS is not trying to destroy the dollar overnight. Instead, it is attempting to build alternatives slowly, focusing on regional trade, local currencies, and financial cooperation that reduces exposure to US financial systems. Number 2. Why de-dollarization is accelerating in BRICS. Nations. De-dollarization means reducing reliance on the US dollar for trade, reserves, and payments. The latest trend shows BRICS countries increasingly settling trade in local currencies, such as China paying for Russian oil in yuan, or India paying Russia in rupees through special mechanisms. The main driver here is sanctions risk. When countries see dollar access being restricted, they begin to question whether holding dollars is safe long-term. Another factor is US interest rates. Higher US rates strengthen the dollar, but they also make dollar-denominated debt more expensive for emerging economies, pushing them to seek alternatives. Central bank data shows that while the dollar still dominates global reserves, its share has slowly declined over the past decade, while gold and non-traditional currencies have increased. This is not a collapse. It is a gradual diversification, and BRICS is at the center of that movement. Number 3. Can a BRICS currency or system replace the dollar? One of the most hyped ideas online is a single BRICS currency replacing the US dollar. Here is the reality analysts agree on. A BRICS currency is extremely unlikely in the near future. BRICS countries have very different political systems, inflation rates, capital controls, and economic priorities. For example, China tightly controls capital flows, while India operates a more open market system. This makes a shared currency impractical. What is more realistic is a BRICS payment system rather than a BRICS currency. Think of it as an alternative settlement network that allows trade without using the dollar or SWIFT, similar to how China's SIP system works alongside SWIFT. Analysts emphasize that the dollar's strength comes not just from usage, but from trust, liquidity, rule of law, and deep financial markets. BRICS does not yet offer a single market that can match US Treasury liquidity or transparency. That limits how far de-dollarization can go. Number 4. What this means for the US dollar and the American economy. Despite headlines, the US dollar remains the world's primary reserve currency. Over 80% of global trade finance still involves the dollar, and US Treasury bonds remain the safest and most liquid assets during global crises. However, analysts warn of long-term shifts, not immediate danger. If more trade bypasses the dollar, the US could face slightly higher borrowing costs, reduced global demand for treasuries, and less flexibility in using financial sanctions. For everyday Americans, de-dollarization does not mean the dollar suddenly collapses. But over decades, it could contribute to higher inflation pressure, especially if the U.S. continues to run large deficits while global demand for dollars slowly weakens. The key point is this: the dollar is not dying, but its monopoly is being questioned. Number 5. The most likely future scenario. According to analysts, most serious analysts agree on one outcome: a multipolar currency world. This means the dollar remains dominant, but shares space with other currencies like the euro, yuan, and regional trade currencies. BRICS will likely succeed in reducing dollar use within its own network, especially for energy and commodities. But replacing the dollar globally would require decades of financial reform, trust building, and open capital markets that do not yet exist. In other words, de-dollarization is real, slow, and strategic, not sudden or catastrophic. The biggest risk to the dollar is not BRICS alone, but U.S. fiscal discipline, political stability, and long-term debt management. So BRICS is challenging the system, not overthrowing it. The U.S. dollar remains powerful, but the world is clearly preparing options. Understanding this shift helps separate fear from facts. If you found this analysis useful and grounded in real research, subscribe to the channel for more deep, unbiased geopolitical and economic breakdowns. Thank you for watching.